Oh, Hatham, it looks like Nicole might be waiting to be let in.
Hello.
Hey, Nicole.
I can't turn on my video. It says the host has stopped it.
Yeah, well, I've just make you a co-host, so you can do that right now.
Perfect.
So I think we can proceed now, Dan, if you're good with this.
Okay, great. So thank you very much again, Hatham, for inviting us here today. So we're going to be presenting today about why filing taxes in Canada is a good idea. My name is Dan Barreiras. I am a personal banking specialist at Libro Credit Union. I've been with Libro for almost 17 years now, working in a variety of different roles. But right now, my job is, like I said, a personal banking specialist. So we call ourselves coaches. So coaching people on anything regarding their finances, whether it's what type of bank account to open, or borrowing, or budgeting, or how to operate an account. But we present these presentations to help share financial literacy. And again, today we're going to be chatting about why filing taxes is a good idea. So I'll let Megan and Nicole introduce themselves, and then we'll jump into the presentation.
Hi, everyone. My name is Megan Dusleth, and I'm an investment specialist with Libro. I have been with Libro for 6 months.
Thanks, Megan.
And my name's Nicole Navarro. I've been with Libro for about 5 years now, and I am a credit administrator. I take the loans and mortgages that Dan does, and I get the money to our owners.
So thanks for introducing yourselves. So again, we're going to be presenting. We have an hour booked for this presentation. If you have any questions throughout the presentation, please enter them into the chat, and we'll all keep an eye on it, and we'll make sure that the topic is presented in full, but try to address any questions that we can as well. So I will leave this to Megan to kick off. And Megan, you're muted.
Thank you. That has to happen at least once. As Dan said, we're going to be learning about filing taxes in Canada. Please ensure that you're staying muted when you're not speaking, but unmute if you are speaking. Can you change the slide, Dan? All right, so what are we going to learn today? We're going to learn, today we're going to learn how income taxes are used, why it makes sense to file a tax return, even if you don't owe money, and benefits available to lower income taxpayers in Canada, and much more. So what is income tax? Income tax is mandatory payments to the federal and provincial government that pay for general services. So what does income tax pay for? A lot of the money that's collected with income tax, which includes GST, EI premiums, CPP premiums, and other government taxes, are spent on transfers to individuals and as well to other government levels, such as provincial, territorial, and municipal. So even though it may feel like your money is going into a black hole, odds are that a lot of it is working in your community and helping people you know, even your own family. So income tax pays for our essential services, public transportation, infrastructure, hospitals, schools, social assistance, and more. So this chart shows you what the federal government expenses were in 2016 to 2017. So 29% of income tax was transferred to people, and 22% was transferred to other levels of government. So that's the provincial, territorial, and municipal. So who has to pay tax in Canada? Full-time residents, part-time residents, non-residents who earned income in Canada, and deemed residents who spent 183 days or more in Canada. Whether or not a person is a resident of Canada is determined by many factors. This can include maintaining a residence in Canada, having relatives in Canada, having bank accounts, and other social and economic ties to Canada. If you're not sure if you're a resident, you should speak to an accountant, since the amount of time you spend in Canada is not the only factor that determines if you're a resident. True or false? Because I earned such a small amount in a year, it's not worth filing income tax. True or false? Go ahead and type your answer in the chat. All right, lots of falses, and that is correct. That is false. You may be entitled to credits or benefits, especially if you have low income or children, or both. So it's always a good idea to file income taxes. It is confusing the first time you file, or if you have income from a variety of sources, but there are resources, free and paid, to help you. It makes sense to file since you may be entitled to tax credits and benefits, which can give you an immediate refund on your taxes that you've already paid, or make you eligible for certain benefits from the government. If you have children, these amounts together could be over $1,000 a year. So once again, the benefits of filing is that you may be entitled to credits or benefits, especially if you have low income or children. I'm now going to turn it over to Dan to discuss how income taxes are calculated.
I almost started talking while I was muted. Thank you very much. So how are taxes calculated? So it's a two-step process. What you do first is you take the income you've received before taxes and subtract certain deductions that apply to you, such as RSPs, sometimes applicable moving expenses, childcare expenses, interest and other carrying charges, etc. And that will get you to your net income. So your net income is the amount used to calculate the benefits that you're entitled to, the benefits such as the ones that Megan mentioned earlier. Your taxable income is your net income minus any other deductions you're allowed, so such as non-taxable benefits. Taxable income is then used to determine the amount of tax that you have to pay. This is where things can get interesting and kind of confusing, and why it makes sense for low-income Canadians to file a tax return. The deductions can mean you can get money back and might even be eligible for tax benefits. If you have an employer, oh, that's for the next slide, sorry. If you stop and ask if there are any questions yet. Sorry, I see a note here that I can't hear you guys. Can you hear me very well now?
We can hear you fine, Dan.
Thanks, Megan. Doesn't look like there are any other questions, so I guess I will move on. So if you're an employee, you can ask your employer to deduct more taxes from your paycheck to avoid paying extra taxes at the end of the year. So for example, if you're an employee who gets paid every 2 weeks, which is common in Canada, your employer will deduct a certain percentage from your check each time you get paid. The amount they take is based on what they believe your annual salary or income will be if you worked those same hours for that same rate of pay for the whole year. If you expect to work full-time for a few months of the year and not work the rest of the year, you'll be paying too much tax off those paychecks. When you file your income tax return for the year, if you have no other income, you should get a refund. And that's if you've increased the amount of tax that you paid. For example, if you earn $300 a week, you'll be taxed as if you earn $15,600 a year. So that's $300 times 52 weeks. Even if you only work half a year, you'll be taxed as if you're going to make that much. The government has tried to make the tax system as fair as possible. One thing you can do if you only work part of the year is to ask your employer to reduce the amount they deduct from your paychecks. Some people who maybe work more than one part-time job may not be paying enough taxes with each paycheck. In that case, you may want to ask one of your employers to deduct more taxes so that at the end of the year, you're not surprised with owing any tax money. If you're self-employed, so self-employed just means you don't actually work for an employer who deducts taxes from your income. It means you're working for yourself or you're a contractor and you're generally paid a gross amount of money. Since you're not paying income tax on each check you receive, you should keep track of approximately how much you'll owe at the end of the year and put that money aside every month or each time you have an invoice paid. A recommendation is to put aside 20% of every check so you have money in the bank to pay your taxes when they're due. Save all receipts for anything you buy that is for your business, since you can claim those as expenses against your income, which reduces your taxable income. If you have a home office, make sure you keep rent receipts. Keep hydro and phone bills and any other bills related to your home, since you can claim a portion of those costs based on the size of your home office. If you have income over $30,000, you must also apply for an HST number. Once you have your HST number, you must charge HST on all your sales. But you also get to claim back 50% of the HST your business pays each year. Verify if you need to register separately for PST within your province. So deductions you can claim. Deductions are always a good thing. So a tax deduction is an amount that the government allows to be used to reduce your taxable income. Some examples would be pensions and savings contributions to an RSP, sometimes applicable moving expenses, tuition expenses to post-secondary school, or any disability expenses. There are also tax credits that you can claim. So a tax credit reduces the tax you pay on your taxable income. So a tax deduction from the previous slide reduces the taxable income that you make. A tax credit reduces the amount of tax that you have to pay. The tax form you complete has what are called lines, which is where you enter the amount of money related to all of the items the government wants to know about, such as all of your income sources and amounts, and offers you benefits for paying, such as many of the items listed on the government's website and on this slide here. So some tax credits that you can claim are medical expenses, educational credits for post-secondary students, any donations that you make, and there are many more credits that you can claim. Each province applies a different tax rate to its residents, and this is due to a number of factors. One important and interesting factor is that each province funds different public services to different degrees. For example, even though it appears that Manitobans pay a great deal more, almost 5% more for services than residents of British Columbia or Ontario, the fact is that British Columbians pay much higher premiums for their car insurance than residents in Manitoba. The point is that it's good to understand both how much you'll have to pay for the services you receive in your home province or territory and the services that you're receiving for that money. Children and family benefits and tax credits. So the Canadian government allows or makes allowances for children and family members. It's very likely that people in this group will have questions about the particulars of these credits. If you're not familiar with the details or the credits, you can visit the CRA website for more information. This workshop is simply to let you know kind of high level what's available and kind of some basic or more common credits or benefits that you can receive. Yeah, I guess I should have started this presentation by saying we're not necessarily tax experts. We have a good understanding and we look at tax returns and work with people on their finances. But if you're more curious or looking for more info, specific info about tax credits or benefits, then it would be available on the CRA website. So those were benefits that you can claim for children and family benefits. There are also just adult benefits. So there's the working income tax benefit, GST or HST benefits that you can receive. I think it used to be quarterly. I think it's still the same. And seniors can also claim or receive a guaranteed income supplement, which helps bump up income for any seniors who may be in a low income tax bracket. And I think this is where I'm going to pass it on to Nicole.
All right. Thanks, Dan. So now we're going to go into income that is not taxed. So there's different forms of income that are not actually taxed by the government, and you don't have to report the certain amounts in your income. So different items that are not taxed include compensation received from a crime, or if you are a victim of a crime or motor vehicle accident, lottery winnings, most gifts and inheritances, most amounts received from a life insurance policy, most payments commonly referred to as strike pay, even if you perform the picketing duties, any HST or GST credit, and most amounts received from the tax-free savings account. Any income from those items is not taxable. All right, now we have another true or false. So true or false, it's better to wait to file my taxes until I have the money to pay what I owe. We have 3 falses. It is false. So it's always best to file your taxes on time. You may be eligible for tax credits and benefits. Also, by not filing, you may be subject to fines and interest on the amount you owe. All right, next, perfect. So now we're going to talk about working under the table. So if you are working under the table, you are participating in the underground economy if you do not report all of your income on your tax return, or you do not pay the proper sales tax on your purchases. If you participate in the underground economy, you avoid your tax responsibilities and place an unfair burden on all law-abiding taxpayers. So by working under the table, what that means is you are getting money, but you're not claiming it on your taxes, so you don't have to pay tax on it. However, that is illegal, and all income earned should be reported. What is the CRA doing to combat the underground economy? So the CRA has access to a variety of ways to find people who are not reporting all their income. So there's leads from taxpayers, information sharing agreements, spot visitors by auditors, information from third-party reporting systems. There's specialized computer software out there, the lifestyle audits, and leads from other audit files. So the CRA operates a number of compliance platforms to deal with suspected cases of tax evasion, fraud, and other tax offenses, as well as non-compliance with Canada's tax laws by those who earn income from illegal activities. In some situations, the CRA will seek legal action against an individual or company for breaking the tax law. In addition to paying fines, violators could lose their business or home and even go to jail. So claim all the taxes you owe, or claim all the income you earn. Okay, so now we're going to talk about your responsibilities and your rights. So we're going to start with your responsibilities. Next slide. All right, so your responsibilities. So your responsibility for filing an income tax and benefit return by the filing deadline. So generally, your return has to be filed on or before April 30th, and your balance owing must be paid on or before April 30th. For self-employed persons, if you or your spouse or common law carried a business in the last year, your return has to be filed on or before June 15th. But if you still have a balance owing, you still have to pay it on or before April 30th of the next year, correct? It's not giving me a year on here, but it's of the next year you have to pay it.
Sorry, no.
Same year.
Right. So if you're self-employed, you only have to file your taxes by June 15th, but you still need to pay any tax that was owing by April 30th. So they're giving you a longer time to file your taxes, but you should have already paid your taxes until before then.
There you go. So you're also responsible with providing the CRA with accurate and complete information to assess your return and benefits correctly. And you're responsible for paying the correct amount of tax. Additionally, you're also responsible for getting help when you need it, getting a social insurance number, and keeping your information up to date, in particular your marital status and direct deposit information. And now we'll talk about your rights. So your rights, when you deal with the CRA, you can expect to be treated fairly under clear and established rules. The CRA has a taxpayer bill of rights, which is on their website. So there's taxpayer relief provisions. So if extraordinary circumstances or difficulties prevent you from filing your return or paying your taxes in time, the taxpayer relief provisions may allow the CRA to cancel or waive the penalties or interest, accept certain late, amended, or revoked elections, and refund or reduce the amount payable beyond the normal 3-year period. So these extraordinary circumstances, you might not be able to meet your tax obligations on time if any of the following occur. A natural or human-made disaster, such as flood or fire, a personal misfortune, such as serious illness or accident, an error in CRA publication, a civil disturbance or disruption in services like a postal strike, or an inability to pay due to financial hardship. You can apply for taxpayer relief if you experience any of these situations. So you also have a right to complaints and disputes. You may have a dispute about the way you were assessed or a complaint about the service you received from the CRA. Often the dispute or complaint is caused by a lack of information or by a simple miscommunication. So what to do if this happens? You want to call the CRA and speak to an agent. If you still do not agree with their assessment or decision, you have the right to a formal review. And next slide. All right, so where to find help with filing your tax return? You don't have to file your taxes alone. So there's many places you can do this. If you want help with your tax return, there's many options. I think, Megan, if you could share that link with that has a bunch of different options for online help. So tax laws can be complicated, and sometimes filing a relatively simple return can be confusing. If you don't want to accidentally overlook deductions and credits in which you are entitled, it may be a good idea to work with a tax return expert. Some options include a service like H&R Block. So fees at H&R Block typically depend on income and how many T4s you are filing with your income taxes. They have associates who speak many different languages as well. There's the Community Volunteer Income Tax Program. This is a collaboration between community organizations and the CRA. Community organizations host tax preparation clinics and arrange for volunteers to prepare income tax and benefit returns for eligible individuals who have had a modest income and simple tax situation. There are certain guidelines and income thresholds to be met in order to qualify. The CRA provides coordinators and offers training and tax software. And Megan put a link in there of different, I believe it has different websites of where you can get help with your income taxes. Okay, next slide. So how to file your own tax return. So for people who want to file their own tax return, for people who want their tax return to be easy and convenient to file, but who also want to file their own, there are a number of free services that allow you to file online. So one is NetFile. It's fast, easy, and secure service that allows you to send your tax return to the CRA online. It's an internet filed tax returns must be prepared using certified software for the NetFile program. And many of these products are offered for free. So that is a list of NetFile websites on that link. Usually the processing time is 8 days or less. There's eFile. Understand that this system lets registered electronic filing service providers complete and send your tax return to the CRA electronically. So you take your documents to a tax preparation service provider. You will pay a fee, and processing time is usually 8 days or less. There's also the paper return. So you can get a paper return at all post offices and Service Canada offices starting in February. You will complete a T1 general income tax and benefit return for the province where you lived on December 31st of the previous year and mail it to your closest tax center. The processing time on those, though, are about 4 to 6 weeks. And what you need to know before you file. And next. Or what documents you need. So before you start to prepare your return, you will need, firstly, your income information slips. So this will be your T4 from the previous year, T5, T2202A. There's lots of different abbreviations for them, but however you're paid, that's what you will need. Typically, most people will receive a T4 unless you are self-employed. You'll need any information relating to any income not reported on an information slip, such as self-employed income. You'll want receipts for your deductions and credits you can claim. So Dan mentioned that earlier. You'll want the tax preparation software if you're filing online. You'll want the general income tax and benefit package for the province you're filing in, that you lived on December 31st of the previous year, if you are going to complete the paper return. And there is guide T4055 for newcomers to Canada if you were a newcomer to Canada in the previous year. And so what is a T4 slip? So a T4 slip is the summary of your employment earnings and deductions for the year. If you received employment income during the year, you should get a T4 slip from your employer by the end of February for the previous year's earnings. If you lose it or misplace it, just ask your employer for a copy. If your employer does not give you a T4 slip, you must file on time anyway. And you can use your pay stubs or statements to calculate your income and any related deductions or credits you can claim. And next slide. Okay, so after you file, you don't want to spend your refund before you get it. So if you are getting a refund, you will receive your refund faster if you do it online. If you have provided your bank account information to the CRA, they will direct deposit your refund right to your account. When you file online and sign up for direct deposit, you may receive your refund in as little as 8 days. If you have a balance owing, it is due by April 30th. If you cannot pay the full amount owing, you can avoid a late filing penalty by filing your return on time. You will be charged compound daily interest starting May 1st on any unpaid amounts owing. And if your balance owing is $2 or less, you do not have to make the payment. If you need to change your return, if you file your return, then realize you did not include information that may affect the calculation of your taxes, do not file another return. Wait until you receive your notice of assessment before you request a change in your return. And you can find instructions on how to change your return on the CRA website. If you disagree with your assessment, you should call the CRA to discuss the matter. Many misunderstandings are resolved this way. If after contacting the CRA, you are still not satisfied, you can file an objection, which is the first step in the formal process of resolving a dispute. The time limit for filing an objection is 90 days from the date on your notice of assessment. You can find instructions on how to file an objection on the CRA website. All right. So for we have a useful website for you. I'm going to pop that in as a resource. So it's www.cra.gc.ca. You'll be able to find a lot of information there about taxes.
Also, like David raised his hand. So David, I'm not sure if you want to ask your question or type it in the chat, however you'd like.
Yeah, feel free to unmute yourself, David.
Oh, well, I couldn't unmute myself before. So anyway, let's go to the question. Thank you, panelists. So I wanted to, can you guys hear me?
Yep.
Cool. I wanted to bring up the student loan. So question is like, how can I say, if you have student loans, you can pay less income tax. Would you agree with that? Like if you owe student loans, you have some credits not to pay as much income tax. Is this true? Yeah.
So correct me if I'm wrong, Dan, but it wouldn't be based on your student loan. It would be based on your income being lower as a student.
when you that's it, that's oh wow, see, that's right away, that's what I'm trying to, I really have trouble understanding this. So you mean it might be calculated based on what your income was in the year that you had student loans? It's just my student loans would be, you know, going like 10 years ago or something, but I still haven't paid them off and I'm low income, right? And I'm trying to think about, I hope I won't always be low income, but I am right now. And so the question we had, I'll just wrap up, guys. So I'm almost finished. The question was like, well, my parents are not low. Well, my mom's not low income, right? So she pays more taxes than me. So could I transfer my, like, the student loan, whatever it's called in Revenue Canada? Sorry, I don't know the technical term, but there's like anyway, could my mother pay less taxes? You know what I mean? And that way we would actually pay off my student loans because she would pay less taxes. So, you know, do you understand? I'm going to leave it there. If no one knows, that's okay. But this is something I've been curious about. I want to throw out there. Thank you.
Thanks for your question, David. So you wouldn't be able to transfer the interest that you pay on your student loan. You can't transfer that to your mom. But it's possible that you're able to deduct some of the interest. I can't say for sure without knowing your situation.
So just quickly, so you distinguish between the part that's interest and not interest, and you think the rules may be different there too. So I have to ask an expert about that. Thank you.
Yes, there's certain loans that you can claim the interest for, and I'm not sure if your student loan would qualify for that. So it's great if you can check with someone, but I know for sure that you wouldn't be able to transfer that to your mom. If you had tuition expenses, for example, you said it was a long time since you were a student, so I'm guessing you don't. But if you had tuition expenses, you can transfer that to a parent or a spouse.
Thank you, Megan, for this. We have another hand here from Omar. Omar, please.
Yeah, thank you all for the presentation. I have two questions. First, I am a PhD student with scholarship, and I'm asking about the refund for the pensions and the tuition. And this year, I'm not TAing for that, so I have only the T4A and the T22. So I applied for this tax return on the YouFile website, and they told me that I have no return about that, no refund. Thank you.
So, Omar, I'm sorry, I was trying to listen, but my speakers, they're not that great. I wasn't able to make out the question in there. Do you mind?
No, I can return it now. Okay. I have a scholarship here as a PhD student, and
Yes.
I have my tuition fees. So I applied for the T22, and I put the value there. And also a scholarship, I put it under the pension. And then when I calculated the refund, it told me that you have zero refund for that. So I was wondering about is it correct or not?
So is it correct that you would have no refund?
Yeah, because I'm not having a teaching assistant until now in 2021. So I have no T4 slip, but I have T4A slip, T22 slip, but it calculated it like a zero refund. I want to check for that. Thank you.
So Omar, that would be difficult to answer just because, like, we know, like, you've shared a little bit about what's on your tax return, like the T4A income that you received, but we don't know about any other deductions or anything like that.
Yeah, I saw the slides like about the pensions and tuitions that they can be refunded. So it's like some conflicts about this calculation because, like, it seems to me like it's not refundable.
So there's certain tax credits. How they work is some are refundable tax credits and some are non-refundable. Off the top of my head, I'm not sure if the tuition is refundable or not. So how it works if they're non-refundable is that they'll reduce your taxes owing to zero, but they won't give you a refund. So that could be the option of why you're ending up with exactly zero. With tuition, so with your T22, I'm not sure the rest of the numbers, you can also carry forward your tuition amounts if you don't fully use them on this year's tax return.
Okay, my last question is about the T4, T55 for the newcomers. I came here in the last year, so is there any conditions for that, or I can apply for it?
So I posted a link in the chat for newcomers to Canada. I can post it again and hopefully that helps. What was your question about that specifically?
Is there like a specific, I have to fill this form in my U file and I will recalculate it to see if it's refundable or not?
I'm not exactly sure, to be honest. Once again, we're not tax experts. So I don't have the answer. Nicole or Dan, do you guys know?
No, I would just say check out the link that Megan's going to repost, or no, Dan didn't post it. Sorry, Megan's going to repost it, and it should be able to give you more information on the newcomers to Canada taxes.
Okay, thank you.
Is there any other question, comment? I think we can proceed if I don't think we have any.
Okay.
So in our presentation, we covered how income taxes are used, why it makes sense to file a tax return, even if you don't owe any money, about the benefits available to lower income taxpayers in Canada, and much more. And this concludes our presentation. Some questions were already asked, but if you have any other ones, feel free to ask, or even you can send us an email afterwards and we'll be able to send you in the right direction, hopefully. But also you could go to a tax specialist who could answer better than we could.
Thank you very much. I would like to thank our distinguished panelists for this very informative and useful presentation. Thank you very much for being with us today, and we are looking forward to have you more sessions with Rights and Responsibilities Awareness Initiative. This service is what makes this community great. This is how we try to serve people, trying to make our community better. Thank you very much for being with us, and stay safe, everyone. Be well and stay safe, and looking forward to see you again at another session with Rights and Responsibilities Awareness Initiative. Be well, everyone.
Thank you for having us. Have a good night.